cut exports in August to help reduce the global crude glut, the G word. We're talking still the G word. Pete McGuire from XM.com. When do we stop talking the G word, Pete?
Well, good afternoon, Carson. I think where you're looking at the moment, those extra 200,000, you've got Libya and Nigeria producing at big numbers. There's no doubt they're very fractured when you think of the last couple of days in St. Petersburg. Novak, the oil minister from Russia, is saying you could see additional cuts on top of that number if there's compliance. And that seems to be the great issue moving forward. Ecuador has said, Carson, that they're not going to be able to keep on touch with those production cuts, and that's going to cause, I think, a fracturing across the whole fabric of it.
And let's just be clear about the Saudis, what they've said to us here, because the Saudis themselves just days ago admitted breaching production thresholds, did they not?
Yes, they did, and they're going to say now, you know, we'll be trimming back production. Their export market is about 6.6 million going barrels per day, that is, going forward into August. Put your mind back a year ago and it was 7.6 approximate. So they've really taken a haircut. If $45 a barrel oil or 48, you know, pick a number, it's $48 million a day that you're throwing away not being able to produce. So eventually it must have an impact to your budget.
But it just tells you, does it not, that the largest producer in the group, this agreement kicked in January, if they're not capable of compliance barely 7 months in, go down the food chain and talk about those budgets and those wobbles and those blinking of positions. In a sense, what Saudi's just told us means nothing for the rest of the group, does it?
Well, no, I agree with you to a large extent, but the other side, we had 110% compliance, so the tanker tracker, which is a component that analyses movement through shipping, 110% compliance in May, 92% in June. So the wheels could be starting to fall off a little bit. I think that was the reasoning why you had that meeting in St. Petersburg. And let's just see what happens over the rest of this Northern Hemisphere summer.
I mean, just question, how do you get 110% compliance? Just get your head around that. I mean,
well, that's right. I mean, you're either 100%, I would have thought that would be the magic number, but they've obviously trimmed back more. And they're putting that number forward and saying, what, we're 110%. We've over-delivered on the production cuts.
So they say. Go,
Tony Farnham here from Patterson's.
Hello,
I look at the excitement that's happening, what they're going to do in August, but this is an ongoing story. This is something has to be done month after month, and you already got some analysts out there talking about revisiting of the agreement in November. Surely this is only just a momentary bit of joy in a continued challenging environment.
Well, exactly, and we put our mind to the likes of Libya. They were producing, they're at around about 1.6 million barrels a day. Now, if you go back to 2011, before the chaos and Gaddafi, they were at around about 1.4 million barrels a day. So they haven't got the production cuts. They'll naturally want to increase and try and take that headline number. Nigeria the same, and that's going to cause, I think, further fractioning across the fabric of OPEC and the non-OPEC producers. So the next couple of months ahead will be very interesting. I think the one part that they've had a little bit of fun with is, you know, a weakening US dollar. That's off from 103 on the US dollar index to around about 93. So it's had a big correction since Christmas.
You think there's any other countries could go into the Ecuador basket, if you understand what I mean by that, and say,
yes,
it's all too hard, we want the money?
Well, I think Venezuela is probably bordering on that as well. Any of the South American producers, they're very much under the pump, and they're having great amount of difficulty trying, from budgetary issues, poverty and so on, across their whole community and economy. So I wouldn't be surprised that you see a couple of others falter over the next couple of months, Tony.
OK, let's switch commodities. Look, let's talk about Abrupca brouhaha in Brazil and what this means for sour coffee, or at least bitter coffee, and maybe a boon for the sugar industry as we try to offset the bitterness with more
you
of
need
the
to
sweet
sweeten it
stuff.
up. Exactly, Carson. They've had major issues as far as beetle and eating into the bean itself. Very, very worrying for all the producers over there. They're on the back of that. They've had large rains and they've had plant fatigue because of bumper harvests over the last couple of years. So there are certain pesticides that they've ruled out. They would have normally been able to take action on those, but now with differing agreements and new pesticides, they won't be able to target these particular bugs, which is going to their supply.
Yeah, so maybe sugar's the winner, though, in all of that, you know, just looking forward.
It could well be.
Coal now was interesting because we heard from Wes Farmers today, learning about its Kara ops and, you know, bigger picture. Just talk to what looks to be an interlude, and I stress the word interlude, and a long-term decline. Indeed, traction seen as ebbing away later this year, even though we're at 8 months highs for the coal price.
Well, exactly. You know, 8-month high, China consuming at record levels. They've had torrential rains and the Three Gorges. Just to give, you know, the viewers the idea, you've had that big, large hydro, the largest in the world, the Three Gorges. Torrential rains have had to slow down the amount of water going into the Three Gorges because of just sheer volume through those rains. So they've had to turn off certain parts of it in the sense of the hydro power, recruit more coal power for firing up the power plants, and they've got coal prices now. They've had a big rally, up 33% from the lows in May. That's only 2 months ago. We're now at around about that $98 a tonne for the Asian benchmark.
Okay, over to bullion we go. Tailwinds thanks to greenback weakness. Beyond the greenback weakness, what else are key drivers, if any, from your perch, Pete?
Well, certainly tomorrow, what happens as far as Janet, the Senate, then it again Thursday, and then you've got the numbers coming out on Friday. So I think the next 72 hours will be very, very crucial. There's no doubt that they want to trim back and, as far as the liquidation of assets for the Fed, but let's just see if there's some momentum or some movement. The next couple of days could be very, very interesting how it plays out. That seems to be the major, I think, major issues on the radar, and that's what all the traders are keeping an eye on.
Okay.
The Trump effect for a different sort of way in terms of the dramas that are happening in Washington at this particular point in time, I think is something else that has to be fed into it. And a little bit further down the track, the debt ceiling impasse, and Peter's already touched on as well, if the greenback continues to fall away, Europeans and Japanese happily buy bullion.
So on
Exactly.
Trump, so you're basically saying what, Trump and debt ceiling impasse equals Fed in action? By extrapolation, is that sort of the net effect on the fiscal freeze that you just talked to?
All other things being equal, but if you've got stock markets taking off, I think the Fed will some stage or other have to react to that as well. You think of it, you've got a stock market taking off, but you've got concerns about Trump not getting tax reform and also as well infrastructure stories through.
That doesn't add up.
Surely people are going to say profits in US land not going to be where they thought they were going to be end of this year, early next.
Or is that just too hot a topic to handle? Yes. Dave Retting later. Thanking you, Peter, from XM.com.
Thank you.
All the very best. Have a good rest of your week. Okay, let's, of course, take a really, really, really short break. Time for stocks to watch for tomorrow next.